Hello traders, Rich here and welcome to Kucoin episode 18, and today we are going to go over KCS analysis. As usual, I try to make it as educational as possible, so make sure to watch it till the end. If you don't know about Kucoin, it's one of the largest crypto exchanges in the world with over 700 billion traded volume on the platform and 10 million registered users from more than 200 different countries. KuCoin has many features like margin trading, spot trading, mining pool, staking, lending, and many more with over 700 listed coins. If you don't have an account yet, I'll make sure to add my referral link in the description below. And if you create an account through it, you'll benefit from 20% discounts on your trading fees. So let's get started. And as usual, cheers. We always start from the higher time frames, daily and weekly, to know where we are in the market. Thus, we know what to look for on lower time frames. And we can clearly see we don't need any indicators to tell us that KCS has been overall bearish for a while. And if you go for market structure, you know that we have been overall bullish previously, making higher highs and higher lows. However, lately, or like a couple of months ago, we broke below the previous major low. So now we have a shift in momentum from bullish to bearish after we broke below this low. And then we had a classic retest. So impulse breaking below the previous low, retested this previous low, now acting as a potential short-term resistance, rejected it downward and traded low. So now we've got what? Our impulse, correction, and impulse. And we are currently where? That's the importance of starting from higher time frames to know where you are. And we are currently where? In a correction phase. So that's it. Impulse, correction. Impulse, now what? A correction. And it happens to be rejecting the 10 round number, which we previously had many rejections from. So support previously rejected it upward, found rejection around the 15, traded lower, and then broke the 10 downward, now acting as a resistance. Rejected what? The 5 and 6 support area, and then broke the 10 upward, now acting as what again? As support. Rejected the 15 resistance, traded lower, rejected the 10. Broke it upward, now the 15 is acting as a support. Support again, broke it downward, now acting as what? As a resistance. That's the power of starting from higher time frames, because now, just by monitoring price action and support and resistance, we know that we are in a correction phase going higher. We rejected the support and we have a resistance. So we're basically now trading inside what we call, if you want, this floor. That's our floor where we'll be looking for buy setups. And that's your ceiling where you'll be looking for the setups. We've got a support here. We've got a resistance right here. And also, that's lining up perfectly with this channel. So from a market structure perspective, we are bullish. So we drew this trend line, which engulfs the overall movement downward. So the upper trend line is acting as a non-horizontal resistance, lining up with the horizontal resistance, the 15. And the lower trend line is a non-horizontal support, or what I consider an oversold area, lining up also with the 10. Okay, so this indeed is a massive support, massive resistance, and so on. So we'll be expecting a correction now, and then a rejection from the 15, and finally, after you break above the 15, we will be overall bullish. We'll be expecting a movement like this. Okay, but let's take it step by step. For now, around the support, so we are looking for buy setup. Of course, unless we break below this 10 downward, just like here, for example, it would become a resistance. So if you break the 10 downward, of course, this low here, we'll be expecting further movement till around the 5 and 6 support area, which is also lining up with the lower trend line. But let's take it step by step. We are above the 10, so we are looking for buy setups. We always zoom into lower time frames and wait for the bulls to take over. For example, around the resistance 20, we zoomed into daily or H4, waited for this break, and then we expected this movement. Supply here, rejected it, made it lower, and we are currently stuck inside this range in the shape of an inverse head and shoulders pattern. And basically, the inverse head and shoulders pattern is what? Is price is making low lows and lower highs, and then failed to make a low low, instead made a higher low, right? So low lows, higher low, that's what? An inverse head and shoulders pattern. That's our head, left shoulder, and right shoulder, which is basically here. So we were trading lower, big impulse movements, small correction, big impulse movements, and now we are inside this phase here, inside a consolidation, and the price, sorry, let me go back to daily, failed to make a low, instead made a higher low. But of course, this is just an early alert that the bears are exhausted, couldn't push any lower like before, but the bulls didn't take over yet. For the bulls to take over, we need to see a break above the last major high, which is this area here. That's why I'm waiting for this one, and I called it the trigger because then the bulls would take over and we'll be expecting further movement upward. In this case, the correction movement will start, which we saw from weekly time frame, and then we'll be expecting further movement upward, just like this correction from the support to the resistance, from the 10 to the 20, from the 15 to 20, now from the 10 to the 15. Okay. So long story short, I'll be waiting for a daily candle close, a big one above this area for the bulls to take over. Meanwhile, we are stuck inside this range, and for the bears to take over, as mentioned from weekly, we need to see a break below this area. If you zoom into H4 time frame, we are currently in a rising channel, right? We're making higher lows, higher highs, so we are basically bullish from a medium-term perspective from H4, and we are waiting for this break for this short-term or medium-term bullish trend to be extended to become an impulse breaking above this previous high, and then we'll be expecting this movement upward. Meanwhile, if we trade lower from here and break below this entire zone, below the 9, in this case, this would be a trend continuation. So a bearish impulse, a correction, breaking below the previous low as an indication that the start of the next impulse. In this case, we'll be expecting this move, but I want to break a daily full candle break below the 9. So that's basically it. This is what I'm waiting for. We are currently inside the range, waiting for the bulls to take over by breaking above this. That's why I don't know if you can see it. I have my alert right here around the 11.2 to know when we will have this break. Of course, I want a daily candle close, and then I'll be expecting this movement upward, or if we break this, we'll be trading lower. Best of luck, and I'll see you on the next one.